for which we have CA Mahavir Atal sir, who will guide us. I request Bank Chairman Sohil Shah sir give his opening remark and introduce today's speaker.
Thank you, Rakesh sir. I welcome all the members of Nashik branch for this wonderful session by a very learned speaker, Mahavir Atal sir. Before the introduction part, I request all the members to attend for the AGM, for which notice is being given by our secretary. It is on 29 July at ICI Bhavan Ashokaman Friday. So I request everyone to join for the AGM. So coming to the introduction part, it's my privilege to introduce such a young and dynamic speaker for today's session, Mahavir Atal sir, who is currently a chartered accountant and become qualified in May 2011. Sir has completed diploma in international taxation. Sir has having wide experience in handling tax litigations, income tax search and seizure, business restructuring, taxation of ex parties, benami law, etc. Sir is certified arbitrator. Sir regularly appear before tax appellate authorities in Mumbai, Pune, Nagpur, Kolkata. Sir is being a part of training program of newly recruited IRS officers at National Academy of Direct Tax on nuisance of corporate taxation. Sir is also addressing CA fraternity and tax practices association across various districts of Maharashtra and Chhattisgarh on multiple occasions, deliberating on intercessions of direct taxes and international taxation. Till date, Sir has appeared for more than 500 plus cases before various tax appellate authorities across India. So, considering the age factor, I think so. Sir has appeared and Sir has have wide experience. So, with this short introduction, I request our very learned speaker Mahavir Atal sir to address the members. And I once again welcome Mahavir Atal sir to the Nashik branch.
Sir, Mahavir sir, you are muted. Please unmute yourself.
Can you hear me?
Hello. Perfectly audible. Perfectly audible.
Okay. My presentation is visible?
Yes, sir.
Okay. Before I start, I'd like to express my sincere gratitude to Nashik branch for inviting me to deliberate on one of the most vexed, highly debated topic of taxation of shares and securities. I'll call it taxation of shares and derivatives because our main concern today is understanding as to how do we tax derivative transactions, how do we account in our books of accounts, how do we classify it. So considering July month and considering our packed schedule, today I'll try to be very crisp with my presentation. I'll try to finish it in a given an hour's time. And I'll try to address as much as practical aspects as I can figure out. Okay, to start with today's deliberation, let's first understand why this topic is important in today's scenario. Like last night, I was just surfing through the internet and what I read on Times of India website was like, almost 35 lakh demat accounts are being opened every day in India. Can you imagine the figure of 35 lakh accounts? In fact, in 2021, that is the last year, 3 crore demat accounts were opened. And gone are those days where trading in shares or investing in shares were done only by the learned people or only by the chartered accountants or only by the professionals. But nowadays we are seeing that even housewives, even a salaried people, rather even students nowadays, they are doing share transactions and they are doing share trading. That's the reason we can see a sudden spike in number of demat accounts which have been opened. I think all thanks goes to new platforms like Zerodha, 5 Paisa, which have brought share market to everyone's mobile. Now, as I understand that we all do share transaction, few people do it on a daily basis, which I'll call it a trading, and few people do it on a periodic basis, with an intention of creating some kind of an investment. So that's the reason we need to see it as to what is the intention behind the person who is doing the transaction. Now, to start with the subject proper, when we hear about taxation, the first thing we try to focus on is the rate of taxation. Now, I understand and appreciate that we all are aware about the rate of taxation, but still, just to brush up our memory and to put the context of the today's seminar, let's quickly go through the rates of taxation. Okay, here we go. First is listed equity shares and equity oriented mutual fund. We all know that now we have got three different period of holding concepts. Earlier, by the time when we were studying, we only had two period of holdings. One is like up to 12 months, which was in the case of an equity shares or equity oriented fund, and another was in case of all other assets other than equity share, which was 36 months. Now we have three classes. One is listed equity shares, where period of holding is for 12 months. When I say period of holding for 12 months, this is to classify whether your gain is long-term or short-term. I know everyone is aware of this concept, but still, just to brush up our memory, in case of listed equity share and equity oriented fund, if you hold an asset for say 12 months and then you sell it, so whatever gain you realize will be a long-term capital gain. In case of an unlisted equity share, this 12 month is increased to 24 months. So if you are holding a shares of an unlisted equity company for 24 months and you sell after 24 months, it will be treated as a long-term capital gain. And in case of any other assets other than equity share and unlisted equity shares, like land, like your jewelries or any other assets, the period of holding is for 36 months. Now, coming to the first, listed equity share. Now, the tax rate provided for the listed equity share in case of a short-term capital gain is 15%. Right? And in case it is long-term capital gain, earlier, that is prior to 2018, this long-term capital gain was exempt under Section 1038. But then with effect from 2018, that is from 1st April 2018, they brought in a new section, that is Section 112A, wherein they brought in a tax rate of 10% on transfer of listed equity shares. So for all those assets, or rather all those shares which were acquired prior to the amendment in the Act, that is prior to the cutoff date of 1st February, they have brought in a concept of a grandfathering taxation, wherein you don't have to pay tax on the gains you have made till 31st of January 2018. So what we should appreciate is, like in case of a listed equity shares, just a minute. In case of a listed equity share, it's the tax rate is just 10%, which earlier used to be 0%. Earlier it was exempt. So now we are being getting taxed. As I said listed equity share. You know, nowadays people are really fond of investing in like US market or European market. Nowadays we have various applications wherein you can register yourself and you can start trading directly in NASDAQ. Right? So I met a friend yesterday and he said, look, Mahavir, yesterday I made $50 rupees in just 5 minutes. I was like, dude, how you do it? So he was like, look, this is an app. I opened my account there and I started trading in Apple's share. And this is the $50 which I've made in just a minute. And believe me, as I've traded in NASDAQ, this is not taxed in my hand. So I was like, dude, you are under a wrong impression. Being an Indian resident, any income you earn anywhere in the world. So say even if you are trading in a NASDAQ, or even you're trading in a share which is listed in a NASDAQ or Hang Seng, still if you make any gain, that gain will be taxable in India. So he was like, okay, theek hai, tax lagega, but then as per the new amendment, I'll have to pay tax at the rate of 10% because I've held it for more than 1 year. So do you think he's on a right footing? In his case, what he did is what? He invested in a shares of an Apple company in a NASDAQ, that is a New York Stock Exchange. and he earned certain profit out of it. Even though it was a short-term capital gain, let's talk about a scenario where this person must have earned a long-term capital gain. So whether a long-term capital gain earned by him by transacting in a foreign stock exchange will be taxable in India? The answer is yes. Will he be taxed at a discounted rate of 10%? The answer is no. Because this rate of 10% is only provided in those cases where an investment is made in an Indian company, and that too through a recognized stock exchange, and on the transfer a security transaction tax has been paid. So let's keep it straight. If you are transacting into a shares, and that too in a recognized stock exchange, any capital gain you earn will be taxed at a rate of 10%. Yes, they have given a little leeway. So up to 1 lakh rupees, if you earn an income, they won't be taxing it. But anything done or any transaction done without paying STT, like even in case of a listed company, sometimes shares are sold off market. In such scenario, this discounted rate of 10% is not applicable. So this one was for listed equity shares and equity oriented mutual funds. Now coming to unlisted equity shares, we have period of holding of 24 months. In case of a short-term capital gain, tax rate will be the normal tax rate applicable to an individual or to a concern. More than 24 months, long-term capital gain as per section 112 is 20%. So similar, this is for listed bonds and debentures. When we have unlisted bonds or debentures or any other assets, period of holding is 36 months, and long-term capital gain will be taxed at 20%. So till now, things are pretty good, and we all are aware about these tax rates. But the story starts here. If this was just what we call a bit of rebrushing of our memory. But the story starts here. The first and the most important aspect of understanding taxation of shares is classify whether a certain gain or whether a certain income is a business income or a capital income or a capital gain. Capital income means a capital gain. Now, the question which immediately crops up is like, what is the point of classifying business income or a capital gain income? The simple reason is like, look, in case of a capital gain, if you report your income as a capital gain, as you can see, you can enjoy a discounted rate of taxation, that is 10% or 20%. But if you go to a business head, if you go to a profit and gains from business and profession, that is PGBP head, then you'll be taxed at the rate which is applicable to you. That is, in most of the cases, at 30%. But then, as I said, like both these sides have their some advantages and disadvantages. Like in case of a capital gain, where I'm being taxed at a discounted tax rate or at a subsidized tax rate, if I may call, but here I'm not able to claim any other expenditure. Right? Back there, if I report my income as a business income, no doubt it will be taxed at a higher rate, but then what will be taxed is my net income. There, I'll be able to even get a benefit of the expenditures incurred by me. So if I'm doing a trading business through an office, I can claim all the indirect expenses like salary, like electricity, or if I'm using any assets or hardware, depreciation on it. So that's the reason time and again we take a call as to whether disclosing certain income as a business income will be more beneficial to assessee or disclosing it as a capital gain will be more beneficial to the assessee. But then in earlier days, we used to see that there were a lot of litigation surrounding this. When assessee tried to report certain transactional income as a capital gain income, the assessing officer used to take a stand, no, this is not your capital gain income. This should be taxed as a business income. If assessee reports as a business income and the AO feels, AO means the assessing officer feels, the tax officer feels that he can get more tax by treating it as a capital gain, then he used to make those changes. So there was like back there, like almost 6-7 years back, there was a lot of litigation surrounding this. That's the reason CBDT came up with a circular. So this circular is a guideline issued by the Central Board of Direct Taxes for the assessing officer to determine as to whether an income should be classified as a business income or a capital gain income. Now what CBDT says, the circular was issued in 2007, so it was a very generalized what we call a circular. It says that you should look at why the share was purchased, what was the intent of the party, what was the magnitude of the transactions, right? Whether assessee is frequently transacting. So all in all, they have laid down certain guidelines, and based on which they wanted AO to consider whether certain transactions should be classified as a business income or a capital gain income. So even though there was a disability guidelines, still these cases saw a lot of litigation during those days. So finally in 2016, CBDT came up with another circular. And now this time the circular is crystal clear and it has put to rest a lot of controversies. So we all should appreciate this circular. So whenever we get a client and we want to decide whether to classify his income as a business income or a capital gain income, I think this is a circular we should read and we should consider it in its proper perspective. Now what the circular says, that if the assessee, rather if the taxpayer himself reports certain transaction as a stock in trade, repeat, certain shares as a stock in trade, and resultant income is offered as a business income, then AO should not convert it into a capital gain and it should be accepted then and there by the AO. So what should be appreciated? The circular says only about those shares which are held by the assessee as a stock in trade. Circular says if assessee has himself reported as a business income, then AO should not convert it into a capital gain income. However, the circular does not address a vice versa situation. Now, what can be the vice versa situation is that if the taxpayer reports certain income as a capital gain income, then there is no embargo on the assessing officer to accept it. Assessing officer can still say that, okay, I don't want to consider it as a business income. Let's go back to a business income. So there is embargo to the AO only if income is reported as a business income. However, CBDT also clarified this thing. It says that in respect of a listed shares and securities, if they are held for more than 12 months preceding the date of transfer, and if the assessee treats such income as a capital gain income, then the income tax officer should not put such treatment to a dispute and he should accept it. Business income, be that any quantum, any period, AO should accept it. In case of those circumstances where I've held an security for more than 12 months and I've reported it as a capital income, then the CBDT says that AO should not dispute it. Right? But if a taxpayer is frequently transacting into a share market where period is less than 12 months in most of the cases, and still that taxpayer wants to report it as a capital income or capital gain income, then yes, even today AO is very much under his prerogative to convert that capital gain income into a business income. Right? So this is what CBDT circular says. So some or the other way, it has brought in some kind of clarity with regards to the classification of income. Now, classification of income also brings in one more big benefit. And that benefit is in a form of a set-off of losses as well as carry forward of losses. It may be appreciated by everyone that long-term capital loss can be set off only against long-term capital gain, right? So it cannot be set off against short-term capital gain or any other business income. However, on the contrary, if we go to a business income, first of all, they don't have this classification of long-term or short-term. And any business income you earned, or if you have incurred any business losses, so these losses can be set off even against capital gain income and even against your salary income or income from other sources. So when we see the removal of section 1038 exemption, that is complete tax benefit given to long-term capital gain, we just saw it from the one angle कि यार government ने इसके ऊपर 10% tax लगा दिया. But if we see it from the scenario that now even in those circumstances where I have a loss, I can carry forward that loss for 8 years. Right? I hope everyone is appreciating this important aspect, that is the carry forward of loss, set off of loss. Business losses can be set off against any income. However, long-term capital loss can be set off only against long-term capital gain. This is the first aspect. Second, prior to 2018, as the capital gain was exempt, so if you had any loss, that loss used to be treated as a dead loss. Now, as that income is taxed at a 10%, so now if you have got any losses, so even that losses can be carried forward, subject to the fact that they can be set off only against long-term capital gain. So first we checked out on the tax rates. Then we checked out as to how do we classify securities. Do we have any kind of guidelines? Yes, we have a guidelines issued by a security, which can be a very helpful guidelines. And then we also saw the aspects of set off as well as carry forward of losses. Now moving ahead. Earlier, people used to see derivative transaction or future and option transaction as a satta transaction. So all seniors, no one used to appreciate if you are trading into futures and options, right? But nowadays we have seen that there is a complete shift in a mentality. Nowadays, youngsters who are willing to take more and more risk, nowadays they are trading into derivatives more than they are investing into shares and securities. So we need to understand a bit about derivatives. So when I call it derivatives, I mean futures and options transactions. Why it is called as a derivatives? Because it derives its value from the underlying asset. So a Reliance future derives its value from a Reliance share. That's the reason it is called as a derivatives. And in derivatives now we have two options. One is futures and another one is options. Now, the first question which comes to our mind, like if I'm trading into a futures and options, whether it will be treated as a speculative transaction. Let's check the definition of speculative transaction. It is given in section 43 subclause 5. It says speculative transaction means a transaction in which a contract for the purchase or sale of commodity, including stock and share, is periodically or ultimately settled otherwise than by the actual delivery or transfer of the commodity. So the speculative transaction means where you don't take delivery of the assets and ultimately at the end it is settled without taking delivery. So speculative transaction means you speculate कि Reliance के shares के rate बढ़ने वाले हैं और copper और gold इनके shares के rate और इनके rates बढ़ने वाले हैं. So speculative transaction covers those cases where a person speculates. So what is futures and options? So if someone is trading in the futures on National Stock Exchange, is he getting delivery by any chance? The answer is no. What about option? Even though options For an example, a call gives me a right to buy a certain shares at the end of a certain period or on expiry. Do I actually buy that product? Do I actually buy that share? The answer is no. So whether trading in future and option is a speculative transaction, if you read the definition, section 43.5, the answer is yes. So if you are trading in a share, if you are doing a future and option transaction, then whatever income you earn is a speculative income. I know few people are raising their eyebrows, but I'll give clarification about it in a minute. But let's first understand the speculative transaction. What about intraday transaction? I'm buying a certain script in the morning, and before I get a delivery, in second half of the day, I'm selling that stock and I'm earning some profit out of it. Whether the transaction I've entered is a speculative transaction, the answer is yes. Whether the income I've earned out of a speculative transaction is a speculative income, the answer is yes. Now, the obvious question is, what is the difference between a speculative income and a business income? And how does it matters to me if my transaction is classified as a speculative transaction? Business income, as I said, tomorrow if you incur any losses, that losses can be set off against any other source of income and any other heads of income, right? But in case of a speculative transaction, if you earn some income or if you earn some losses, that losses can be set off only against a speculative income. And more often than not, in case of a new traders in the futures and options, we see that they continuously make losses in futures and options. So if I treat transactions in futures and options as a speculative transaction, and the losses they have incurred or losses they have got is a speculative losses, that clearly means that they cannot set off those losses against other business income or other heads of income. That's the reason people are averse to classify their income as a speculative income, right? So intraday trading is a speculative transaction, and income earned or losses earned is a speculative. Second, futures and options are a speculative transaction, and the income earned out of it is a speculative income. Now, further reading section 43, subsection 5, I read specifically clause D, which is in red. An eligible transaction in respect of a trading in derivatives referred to in clause AC of section 2 of Security Acts carried out in a recognized stock exchange, or an eligible transaction in respect of a trading in commodities derivatives carried out in a recognized stock exchange which is chargeable to commodity transaction tax under chapter 7 of the Finance Act 13 shall not be deemed to be a speculative transaction. So the section 43.5 first defines speculative transaction. It says जहां आपको डिलीवरी नहीं मिली वो सारे ट्रांजैक्शन को हम speculative मानेंगे. And in this same section further provides a little exception by saying it's okay if you are doing an eligible transaction in respect of trading in derivatives in a recognized stock exchange, right? And who recognizes the stock exchange? These are not SEBI wala. These are the stock exchanges which are recognized by the CBDT, right? So if you're doing futures and option transaction in those stock exchange which are recognized by Central Board of Direct Taxes, we won't treat that transaction as a speculative transaction, right? Now let's see the list of all the exchanges which have been notified or which have been recognized by Central Board of Direct Taxes. So these are few stock exchanges which are recognized by the CBDT. This include our big two share stock exchange, that is NSE and BSE. Then you have a United Stock Exchange of India. Then you have an India International Exchange. For commodities, you have NCX, MCX, and few more. You can read the names. So that brings to me that if I'm doing a derivative transaction on NSE or BSE, so whatever profit I make out of it, it will not be treated as a speculative income, it will be treated as a business income. However, if I'm doing certain future and option transaction on Ahmedabad Stock Exchange or say on a Kolkata Stock Exchange, then those transactions will be treated as a speculative income, right? And any loss therefore will be treated as a speculative loss. So all those attendees who raised their eyebrows when I said that futures and option transactions are a speculative transaction, I indeed mean it. It's just an exception which has been given by severity in the form of an NSE and BSE stock exchanges, which have been kept outside the definition of speculative transaction. So now we have read about the classification. Now we have also read about the classification of a business income. Okay. All the rates which we have discussed, all the tax rates which we have discussed in our first two slides were pertaining to the tax rates related to the capital gain transaction. And the moment someone trades in a derivatives, if someone is doing trading in a derivatives, but obvious, those transactions are in a realm of a business transactions. So if you are doing intraday trading or if you are trading in derivatives, whatever income you earn, you cannot classify that income or loss as a capital gain account transaction. Because whenever you make an investment, and if you make an investment with an intent to earn dividend, with an intent to earn long-term profit, only those assets are classified as a capital asset and only those investment will be treated as your genuine investment. But as far as derivative is concerned, which are periodically settled, in those circumstances, any transaction will be treated as a business transaction. Now, this brings me to one very important question. And that question is, sir, can I maintain two portfolios? One portfolio is for my investments on which I have a long-term horizon. And on second portfolio, I want to do derivative trading, I want to do intraday trading. So can I maintain two different portfolios? The answer to this question has already been given by the CPTT, and they say yes, you can maintain two different portfolios. In one portfolio, where you have a long-term horizon, report it as an investment or a fixed assets, or the other shares in which you are trading, or if you are doing a future option, show it as a stock in trade, and whatever profit you earn out of it, report it as a business income. So now I can maintain two different portfolios. This brings me to the another important topic of the day, that is, how do we determine turnover in futures and option cases? The first question is there anything mentioned about it in the Income Tax Act? The straight answer to this question is no. Whether CBDT has come up with any guidelines or whether there are any income tax rules, believe me, till date, CBDT has not issued any clarification or any guidance on how to determine turnover in case of futures and options. But fortunately, our CA Institute has given a guidance note on it. Rather, it is a part of a guidance note on a tax audit, where you can find as to how do you compute your turnover. Why computation of turnover is important? This is important for two aspects. First is to see whether you are crossing the threshold of 44 EV, that is whether you are required to get your books of accounts audited. Second is that as to which books of accounts you are required to maintain as per section 44 AA, and whether you can claim a benefit of presumptive taxation scheme, which is given in section 44 AD. That's the reason it is very important to understand and analyze in important to understand and analyze the calculation of turnover in futures and options. The calculation of as I already said, futures and options are always a business transactions. Therefore, what needs to be seen is like, how do we calculate a turnover? What ICA guidance note says, the total of favorable and unfavorable difference shall be taken as a turnover. In other words, all the differences, whether positive or negative, are aggregated for calculating the turnover. In case of a normal share trading, we consider the gross amount of the share transacted. But in case of a futures and options, ICI says that it's okay. You just need to consider whatever profit you have earned or whatever loss you have earned as your turnover. And how turnover will be computed? It will be aggregation of all profits and losses. So for an example, in one transaction of future, I made a profit of lakh rupees. And similarly, in a second transaction, I made a loss of 2 lakh rupees. So to check out my turnover, I'll have to add 1 lakh plus 2 lakh. It will be the aggregate of my positives as well as negatives. This is for futures. I've also taken few examples which are in ensuing slides. Let's first go through the line by line of ICI guidance. Now, second thing, first stands good for future transactions. What about option transactions? Here, ICI says premium received on sale of option should be included in a turnover, right? Irrespective of the fact whether I'm a writer of an option or whether I'm a buyer of an option. So if I'm a writer of an option, so whatever premium I received plus the profit or loss of the transaction, I'll have to aggregate it, and that will be my turnover. So even though if I am buying an option, still the premium which I receive at the time of squaring of that option, squaring of that call or put option, will be considered as a part of my turnover. I know this is little peculiar. Let's check the calculation. So example 1 is for future trading. So in my first example, I purchased Nifty futures 75 units for 18,000 rupees, which I sold at a loss of 17,100 rupees. So therein I made a loss of 67,500. So we won't consider sale value or buy value. We'll only consider the net profit or loss as a turnover or as a receipt. Then coming to the second, Tata Power, I purchased 6,750 unit for 240 bucks. I sold it for 260 bucks. So I made a profit of 20 rupees. Accordingly, I made a profit of 1,35,000 rupees. So the profit will be treated as my turnover. And in case of a third option, buying Nifty, I bought 100 units. My buying and selling rates are same, so I didn't make any profit. So nothing will be considered in a part of my turnover. That means my total turnover will be the aggregate of loss I've incurred in my Nifty transaction plus profit I've made in Tata Power transaction. So 2,02,500 will be my turnover. Right? Now question is like, I've taken a plain vanilla case wherein I've only considered just 3 transactions. But when clients generally approach us, what we see is that he has undertaken hundreds of transactions of futures and options. Now, in those cases, how do we compute turnover? Like, say if in a month I have done 100 transactions, so do I need to check line by line all transactions and then I have to aggregate all my profit and losses, or I have to see it on a periodic basis? That for a month of March, I've invested 5 lakh rupees, I've made 5 lakh 50,000 rupees, so this is the 50,000 I want. Unfortunately, the answer to this question is like you'll have to go line by line, script by script. So if someone is doing daily transactions, so all the transactions entered by him line by line will be considered, and accordingly his gross turnover will be computed. Fortunately, now we have many stock brokers like ICICI Prudentials and Zerodha and 5 Paisa. Nowadays, they are giving up with these reports where they are giving turnover computed script wise. So if you are trading, if you have a client who have an account in such brokers who are giving such reports, then it's okay. So in case if his broker is not giving you a line by line report, then unfortunately you'll have to do it at your own end, right? So line by line, we'll see how much profit or how much stock that is qua each contract. Now coming to the second example of option trading. I hope you remember I said whatever the premium I received, that premium will be considered as my turnover. This is what ICA guidance note says. So coming to our first Nifty 18,200 call option. I bought 100 units for 300 rupees. Unfortunately, I made losses of 90 rupees. I sold it for 210. So my gross loss in that option contract was 9,000. So my turnover will be 9,000 plus premium received. How much premium I've received is the amount I've received at the time of selling that option. So that amount is 21,000. 9,000, that is 30,000. I know this sounds little absurd. This is little illogical. Rather, I'm not able to make out a logic out of it. But this is exactly what ICA guidance note says, that you have to consider a selling rate plus profit or loss. So similarly, in case of a Tata Power, I got 240 put option, 500 units for 45. I sold it for 70. I made 12,500 rupees as a profit. But as I've received premium at the time of closing the option of 35,000 rupees, so I have to aggregate my premium received plus difference. Similar is the case with the turnover of, similar is the case with the Bank Nifty. That is my third example. So in case of a future option trading, all you need to consider is just the difference amount. However, in case of an option trading, you need to consider not only the profit or loss, but also the premium received by the taxpayer. So this was all about computing turnover of futures and option transactions. So now we have seen classification. Now we have also seen turnover. Now, the most frequent question which generally client asks us is like, okay, look, I have done futures and option transactions and I have made losses. This being my first year, I made losses. So do I need to file my tax return? Do I need to maintain books of accounts? Or do I need to go for an audit? Right? This is a common question which everyone must have faced. The boss, I have made a losses. So do I still need to file my return of income? So for this, let's try to find out an answer. In between, I hope everyone is attending this webinar from their office. So if they can take their Income Tax Act in their hand, it can be very helpful to figure out whether in a given case, a client is required to maintain his books of accounts or whether he is required to get his books of accounts audited. So I request everyone to kindly grab their Income Tax Act in their hand. The basic question as to whether Income Tax Act prescribe as to which books of accounts I should maintain, or as to whether I should maintain a books of accounts? The answer is yes. Which books of accounts an assessee should be maintained, or which assessees should maintain books of account, is given in section 44AA. Now what we are trying to do is, like, we are trying to find out an answer for a question that I've incurred some losses during the year. Now whether I need to file my return of income or not. Before filing return of income, first thing which we'll see and appreciate is like whether I need to maintain my books of accounts. Now what section 44 says, that every person carrying on legal, medical, engineering or architectural profession, or the profession of accountancy or technical consultancy or interior decoration, or other profession as is notified by the board in the official gazette, shall keep and maintain such books of accounts and other documents as may enable the assessing officer to compute his total income in accordance with the provision of this act. So 44AA clause 1 covers professionals, right? And it says all professionals, if they are earning a professional income, they should maintain their books of accounts. So what I want everyone to appreciate is, like, if you are a professional and if you are earning something out of profession, so even if you earn 1 rupees income, or even if your turnover is 1 receipt, still you are mandated to maintain your books of accounts, right? For professional, there is no threshold limit. Now coming to clause 2, पहले क्लॉज में उन्होंने प्रोफेशनल्स को कवर किया है, सेकेंड क्लॉज में उन्होंने कवर किया है बिजनेसमैन को. Every person carrying on business or profession, not being a person referred to in subsection 1, shall, if his income from business or profession exceeds 1,20,000 rupees, or his total sales turnover or gross receipt, as the case may be in business or profession, exceed or exceeds 10 lakh rupees in any one of the 3 immediately preceding the previous year. What it says, 2 conditions. His income should be more than 1,20,000 rupees and his gross turnover should be above 10 lakh rupees. And you have to see this, you have to check this threshold not for the current year, but for the preceding 3 financial years, right? Just a small exception, in case of an individual and HUF, this limit of 1,20,000 should be read as 2,50,000 and limit of 10 lakh should be read as a limit of 25 lakh. Now seeing this with reference to the question which we have, my client has done a future on option trading of 10 lakh rupees and he have incurred a losses, whether he is required to maintain his books of accounts and whether he is required to file his return of income. The first answer to this question is, like, if you see his income is below 2,50,000 rupees, therefore he is not required to maintain books of accounts. Second, even his gross turnover, that is turnover of future and option, the way we have seen our calculation is just 10 lakh rupees, which is below 25 lakh rupees threshold. So even he is not required to maintain books of accounts. Now, as far as the fact, now we have seen that he is not required to maintain books of account. Now let's see whether he is required to file his return of income. So if he only has a losses and he don't have any other income chargeable to tax, then he is not required to file his return of income. He is not required to file his return of income. Only in that circumstances where he has an income, right? When he has an income which is chargeable to tax and which is more than maximum amount chargeable to tax, that is more than slab limit of 2,50,000, only then he is under an obligation. He is under an obligation to file a return. Sir, I know that I am not under an obligation to file a return of income, but can I still file my return of income because I want to carry forward this losses to subsequent years? The answer is yes. There is no restriction or no embargo in the statute for filing a loss return. The only restriction is that you should file it before 139(1). That is before July or September or October, as the case may be. Right? So if I've incurred some losses and I want to carry forward those losses, I can file a return, but then Act does not mandate me to file a return of income. Now this was about section 44AA. The another question which frequently people ask me is like, as to whether I'm required to get my books of accounts audited as I'm doing a share transactions. Generally, people mix up section 44AB with section 44AD. Let's read section 44AB. What it says, that a threshold limit is a 1 crore rupees. और ये threshold limit 1 crore की किसके लिए है? Every person carrying on business shall, if his total sales, turnover, or gross receipts, as the case may be in business, exceed or exceeds 1 crore rupees in any previous year. That means if there is a salaried person who is earning say 5 crore rupees salary and is also doing some share trading where his turnover is less than 1 crore rupees, whether he is required to get his books of accounts audited? The answer is no. The answer is no. Because this 1 crore rupees limit has to be seen vis-a-vis your business and not vis-a-vis your other source of income. A person may be having his other source of income in a form of an interest income or in a form of a house property income, but this 1 crore rupees has to be strictly seen vis-a-vis only business. Now, what is the scenario if I have a multiple business? So I am doing a cloth trading, I'm also doing a share transaction, and I'm also selling vegetables. Do I need to aggregate my entire turnover? The answer is yes. You need to aggregate your entire turnover to check the threshold limit of a 1 crore rupees. So the first scenario we discussed about a salaried person where he have some income from a derivative. So he's not under an obligation to get his books of account audited as the turnover is less than 1 crore. Second situation, that same salaried man is having a turnover of 80 lakh rupees, right? And now his profit is 4 lakh rupees. That is, his profit is just 5% of it. Why I am stressing on the word 5%? Because section 44AD provides a presumptive taxation wherein I can disclose 8% or more, and I can get rid of the requirement of maintenance of books of account. Now, in this scenario, a salaried man, his income is less than 8%. Is he required to get his books of accounts audited? The answer to this question is like no. The prima facie answer to this question is no. So then what he is supposed to do? As I said, as his turnover is more than 44AA limit, so he is required to maintain his books of accounts. So if this gentleman is properly maintaining his books of accounts, right, even though he has an income which is lesser than 8%, till the time he has never gone to 44AD, he can still report an income lesser than 8%, and he is not required to get his books of accounts audited. Right? So 44AB provides a threshold limit of 1 crore rupees. Now they've also inserted a new proviso wherein says that we are ready to increase this limit of 1 crore to 10 crore rupees, subject to the fact that all your payments and all your receipts should not be in a form of a cash exceeding 5%. That means you can use cash in your business only up to 5%. If the threshold limit of 5% is crossed, then your threshold limit of audit is 1 crore rupees. If your cash transactions are less than 5%, then your threshold limit is 10 crore rupees. Now, talking about F&O transaction or talking about any transaction carried out in a shares, specifically a listed shares, they all are carried out on a recognized stock exchange. The entire transaction is done through the banking channel. Therefore, in all such cases, in all cases of share transaction, the 44 EB limit is 10 crore rupees. Right? 44 EB limit is 10 crore rupees. This brings me to another important question. So I'm dealing in shares and securities and I've earned some profit out of it. Say my turnover, the way ICI says, is 80 lakh rupees and I've made a profit of 30 lakh rupees. Right? Or rather, let's take 24 lakh rupees, 30%. And I've made a profit of 24 lakh rupees. Sir, can I go to section 44 AD and can I report my income under section 44 AD? Can I report my income of 8%? Can I have an answers on this? Can a person who is transacting shares and securities, in a shares and securities, can he opt for section 44 AD? Any answers? Let's see what section 44 AD says. It says, notwithstanding anything to the contrary contained in section 28 to 43C, in the case of an eligible assessee engaged in an eligible business, a sum equal to 8% of the turnover or gross receipt of the assessee in the previous year, on the account of such business or as the case may be, a sum higher than the aforesaid sum claimed to have been earned shall be deemed to be profit and gains. So section 44 AD essentially uses two important words. One is eligible assessee and the other important word is eligible business. Okay. So if you can open section 44 AD, if you have an act in your hand, section 44 AD has defined what are the eligible assessees, and it means an individual, HUF family or a partnership firm who is a resident but not an LLP. So first thing which we need to check for getting into 44 AD is that it is applicable only to individual, HUF and partnership firm. Second is that it also says that section 44 AD should not be applicable in case of a professionals, क्योंकि उनके लिए एक अलग सेक्शन है, a person earning income in the nature of commission or brokerage, or a person carrying on agency business. That means there are three criteria. You should not be a professional, okay? You should not have an income from commission or brokerage, and you should not have an income from an agency business. Now, as far as trading in shares and derivatives, none of the transaction of share and derivatives doesn't fall under any of these criteria. That per se means that a person who is earning in shares and derivatives, he can very much opt for section 44 AD presumptive taxation, right? And as I earlier said, that this entire transaction is carried out through a banking channel because everything is done on a recognized stock exchange, so there is no question of involvement of cash. So even this 8% is just 6%. So the question which I have raised for consideration is like, I have a turnover of 80 lakh rupees. I've earned a profit of 24 lakh rupees, which is apparent. Now, can I opt in for 44 AD and can I report my income at the rate of a 6%? The answer to the first part is yes, you can get into section 4480. There is no embargo on it. The second thing is that, can I report my income at the rate of 8%? So what assessee is trying to do is, rather what a taxpayer is trying to do is like, he says, look boss, I have earned 24 lakh rupees, I accept it. But as the section says that you have a liberty of reporting income at 6%. So I want to report an income of only 4,80,000 rupees. So do you think it is allowed in the act that on the turnover of 80 lakh rupees, by using presumptive taxation, I only report income at of 4,80,000 rupees, that is 6%, and not the entire 24 lakh rupees? What section 4480 says, 8% or any sum higher that assessee has to offer. So tomorrow, what will happen is that you have chosen to report income of just 6%, and you have capitalized just 6%. So you have reported an income of 4,80,000 rupees. Tomorrow you can use this only 4,80,000 rupees to explain your investments. It cannot happen that tomorrow you purchase a land worth 30 lakh rupees and you come out and say, look, this is the 30 lakh rupees which I have earned in share transaction. This explanation will not be accepted by the department, because department will show you your income tax return by saying, look, you yourself have admitted only 6%. That clearly means that this difference amount is what you have earned, but then you have not disclosed in your return of income. Very often I've seen consultants blanketly using section 4480 by saying 8% profit दिखा दो, आपका हो गया. Demonetization में किसी ने 50 लाख रुपए बैंक में डाले, कुछ कंसल्टेंट्स ने उनको ओपिनियन दिया, आप इसका 8% 4 लाख रुपए प्रॉफिट दिखा दो, आपका काम हो जाएगा. This is not at all allowed. You can capitalize only that amount which you have earned and reported. So the person who had a turnover of 80 lakh rupees and who has earned a profit of 24 lakh rupees is duty bound to report that 24 lakh rupees as a profit under section 4480. Any lesser amount shown by him will go against him at the time of explaining the investments made by him. So this is the point which I want everyone to ponder upon, that 8% is not a standard deduction. हम लोग सेक्शन हाउस प्रॉपर्टी में पढ़ते हैं कि रेंटल इनकम पे 30% का स्टैंडर्ड डिडक्शन आता है, वैसा 8% स्टैंडर्ड प्रॉफिट नहीं है. 8% is just a presumptive profit, but it says 8% or more. Right? So we have answered both questions. He can go into 4480. Yes, he can report his income at 8% or whatever more income he has earned. Now, the another larger questions, which is like, this is the year in which he has reported his income under section 4480. Now in subsequent year, he has made a big losses and he thinks that, look, section 4480 is not of any benefit to me. And he tries to opt out of section 4480. Now section 4480, subclause 4 says that once you opt out of this scheme, you cannot enter into this scheme for next 5 years. Right? That means for all subsequent 5 years, you'll have to maintain your books of accounts and you'll have to get your books of accounts audited, irrespective of the fact whether your profit is above 8% or whether your profit is below 8%. There is only one exception to it. As I said, if you opt out of the scheme, you cannot re-enter scheme for next 5 years, right? And for next 5 years, you have to compulsory get your books of accounts audited. Now, there is only one exception to this. It says that in subsequent year, if your total income does not exceed the slab limit, they've used the word maximum amount not chargeable to tax, that's the slab limit. So अगर आपकी फ्यूचर ईयर में अगर आपकी इनकम 2.5 लाख को क्रॉस नहीं कर रही है, I'm not just talking about share income, I'm talking about your total income, which includes all your income. If it does not crosses 2,50,000 rupees in that scenario, you are not required to get your books of accounts audited. If your total income exceeds 2,50,000 rupees, even by 1 rupee, you have to compulsorily get your books of accounts audited, even if your profit is 5% or your profit is 95%. The another important question is like, okay, so this has nothing to do with taxation of shares and security, just for personal deliberation, whether the turnover which is prescribed by the statute of 2 crore rupees is inclusive of GST or it is exclusive of GST. I already made it clear that this is not related to today's topic, but just to clarify, as nowadays we are getting many questions on this issue, the ICA has clarified it and they have said that if you are regularly following exclusive method of accounting, in that situation, you are not required to consider GST amount as a part of your turnover. So 44AD में मैं बैठ सकता हूँ, 44AD में प्रॉफिट दिखा सकता हूँ, 44AD के अगर मैं बाहर निकल जाता हूँ तो वो हर सालों में मुझे ऑडिट कराना कंपलसरी है, सब्जेक्ट टू दैट कि मेरा स्लैब लिमिट के नीचे टोटल लिमिट है. नाउ व्हाट अबाउट 44ADA? The first thing is like, first question, sorry, whether opting for section 44AD, is it optional to the SAC or is it mandatory to the SAC? Can a taxpayer choose that I don't want to go for 44AD? Even though I have a profit of more than 8%, I don't want to go for 44AD. Is there an option available to taxpayer? The answer to this question is yes. A taxpayer has an option. If you don't want to opt in 44AD at the outset, he can choose not to do so. Only thing is that he has to maintain his books of accounts, and whatever profit he earns after maintaining books of account, that has to be disclosed, irrespective whether it is above 8% or less than 8%. The moment it crosses 44AB limit of 1 crore or 10 crore rupees, get your books of accounts audited. 44AD is for businessmen. Now 44ADA is for professionals. The same question which I have asked for 44AD, I'll ask for 44ADA. Whether opting for 44ADA is mandatory or again it's a prerogative of an assessee. Unfortunately, unlike 44AD, opting for 44ADA seems to be mandatory. No doubt there is nothing written in the act. But when we go back and when we read section 44AB, 44AB is section which provides limit for tax audit. When we read a clause 4 which is related to section 44ADA, it says any income which is which are deemed to be that income under section 44ADA, if you report less than 50%, then you'll have to get your books of accounts audited. So this is apparently what we can figure out after reading the act. 44AD is optional. 44ADA, as per the reading of the act, it is not optional, right? Even though this is not a rational view, but apparently this is a view which I could gather out after literal interpretation of section 44AD. So, as we have covered all the topics in the form of a calculation of turnover, in the form of audits, maintenance of books of accounts, in the form of a classification, I've prepared some illustrations. Let's discuss about it. So this will bring more clarity to the subject. So the first question which I have prepared is, Mr. X started trading in future and option for the first time during financial year 2021. Turnover during the year is 75 lakhs and he made a loss of 2 lakhs. Right? Whether he is required, the first question is whether he is required to maintain his books of accounts. Look at the turnover. Turnover is above 25 lakh rupees. 44AA provides threshold of 25 lakh rupees. अगर आपका 25 लाख के ऊपर टर्नओवर आता है तो आपको बुक्स ऑफ अकाउंट मेंटेन करना है. तो 44A के हिसाब से मुझे बुक्स ऑफ अकाउंट्स मेंटेन करना है. First, what will be the books of accounts which I have to maintain? Nothing. Get all your demat trading statements, get your profit and loss account from the broker. That will be considered as your books of account. You don't need to prepare any tally entries or nothing. So that should suffice. Second thing is that, do I need to, I have a losses of 2 lakh rupees. So do I need to file my return? The answer to this question is that if you don't have any other income, and this is the only loss you have, in that scenario, you are not supposed, or rather you are not mandated by the act to file return of income. But the moment you have other income, which is more than 2,50,000 rupees, then you are mandated by the statute to file return of income. 44AB, do I need to get myself audited? I've incurred a loss. My turnover is 75 lakh rupees. Do I need to get an audit done? The answer to this question is, if you have never opted for 44AD earlier, then you are not required to get yourself audited. But if you have opted for 44AD earlier, and this is a part of those 5 years, and you have any other income which is more than 2,50,000 rupees, then yes, you have to get your books of accounts audited. This is for question 1. Now question 2. Now Mr. X started trading in future and option for the first time during financial year 2021. Now my turnover during the year is 4 crore and he made loss of 20 lakh rupees. So in this case, his turnover is 4 crore rupees. 44AB has 2 thresholds. One is 1 crore and one is 10 crore. Apparently, future and option transaction turnover will be entirely through the banking channel. So in this case, my threshold limit of 44AB of audit is 10 crore rupees. As my turnover is less than 4 crore rupees, I don't need to get myself audited. Here, the question only mentions about loss and does not mention about any other income. I presume that I don't have any other income, and in such scenario, I'm not required to file my return of income. Coming to question 3, Mr. X started trading in F&O for the first time during financial year 2021. Turnover during the year is 12 crore rupees and he made a profit of 10 lakh rupees. 44AA, I need to maintain my books of accounts. 25 लाख के ऊपर का मेरा टर्नओवर. 44AB का टर्नओवर 10 करोड़ है. ये केस में इनका टर्नओवर ही 12 करोड़ रुपए का है. Now as a turnover is more than 2 crore rupees, तो मेरे को 44AD का भी विषय नहीं. So in this case, all in all, Mr. X will have to maintain his books of account and also get his books of accounts audited. Coming to question 4. Mr. X started trading in future and option for the first time during financial year 1920 and declared profit at the presumptive rate of 8% as applicable. During the year 2021, that is subsequent year, turnover from the future and option trading was 10 lakh and he incurred a loss of 2 lakh rupees. And Mr. X does not have any other income during the year. Now, as I said, now what question says that Mr. X in 1920 has opted for 44AD. That means in 1920, if he opts out, then he'll have to maintain the same stand for 5 years, right? And if he opt out, that means he's declaring his profit less than 6%, he'll have to get his books of accounts audited. But as in this case, it has been clearly mentioned that his loss is 2 crore rupees and he doesn't have any other income. So in that scenario, he don't need to get himself, or he need not get his books of account audited, even if there is a loss of 2 lakh rupees and even if he has opted out of section 4480. Question 4 further says that Mr. X want to declare and claim the loss of 2 lakh rupees. As I said earlier, जरूरत नहीं है रिटर्न फाइल करने की, फिर भी उनकी इच्छा है रिटर्न फाइल करने की क्योंकि उनको लॉस को आगे कैरी फॉरवर्ड करना है, then Mr. X is very much within his prerogative to file a return and claim the loss of rupees 2 lakhs as a carry forward. This is in continuation to question 4 and this is the last question, and it says same fact as discussed in example 4 except that Mr. X has an income of 10 lakh rupees during the year. तो हमने 4480 के बाहर आ गए, मेरी इनकम अदर इनकम 10 लाख रुपए है लेकिन मेरा डेरिवेटिव का लॉस 2 लाख रुपए है. But as I have other income more than maximum amount chargeable to tax, that is more than slab limit, so I have to compulsorily get my books of accounts audited. So in this case, Mr. X is under compulsion to get his books of accounts audited. So this brings me to the end of my presentation. These are few questions which I thought are relevant. I've already discussed in my earlier illustrations. So if anyone wants to peruse it and anyone has a question on it, I leave the platform open for discussion. Am I audible?
Yes, sir.
Hello, sir.
Yes, sir.
Yeah, this is Praveen Patil, sir.
Yes, sir.
I have a question.
Yeah.
See, I have a turnover of less than 2 crores in the previous financial year.
Yes.
I had filed under 4480.
80, right.
Right. But this year, my turnover is above 2 crores.
Mm-hmm.
I have income more than this thing, 8%.
Mm-hmm.
So can I opt for 4480 or I'll have to get my books audited?
Your turnover is more than 2 crore rupees and this turnover is out of your derivative transaction.
Derivatives and business.
Derivatives and business transaction.
Yeah.
So first of all, you have to check whether, sorry, your turnover is above 2 crore rupees.
Right, sir. Last
The
year I
moment
was in 4480.
Yes, so but moment your turnover crosses 2 crore rupees, you cannot go for section 4480. 4480 has a threshold limit of 2 crore rupees. That means you are duty bound to get your books of accounts audited. However, in a scenario, if a threshold limit of 10 crore is applicable, that means you don't have any payments or receipts in the cash more than 5%. In that case, you don't need to get your books of accounts audited. You only need to prepare your books of accounts and submit it.
But sir, I'll be opting out of 4480, no?
But then you're not opting out of 4480 per se for the purpose of showing lower profit.
Okay.
Right? 4480 subclause 4 covers mostly those scenarios where you opt out of 4480 because you don't want to show the profit of 8% and you want to go for a lower profit. Because as far as this year, opting out is not an option for you. It's by the virtue of your increased turnover, you're already out of 4480.
Okay, but I don't have to get my books audited.
No, up to 10 crore rupees.
Okay, sir. Okay.
Yeah.
Thank you.
Sir, in the same example, if the turnover again comes down to 2 crores and the profit is say less than 6% in the next year, so it will be third year of opting for T4AD or first year of opting?
So I think we don't have a lot of clarity on this issue. As far as 4484 is a new section, if you know, it has been inserted in 2019. But prima facie, that will be treated as your first year.
Okay.
Yeah.
Thank you.
Because the earlier year, you didn't opted out. You were out of the provisions of 4480. So this year, you are again coming back to 4480 because you are eligible for it. So this should be considered as your first year. Because only then the rationale holds. 4484 was brought into statute to discourage people from entering and exiting 4480 at their whims and fancies. So what people used to do, when they used to have a more profit, they used to go for 4480. The moment they see that they have made losses, they'll get out of it. And then next year, when they have more profit, they'll again try to jump in. It is this planning which 4484 sought to stop. So in your scenario, if you already breached turnover of 2 crore rupees, then anyways, you're not eligible for 4480. So in my opinion, when you again come back, it will be treated as your first year or you're eligible right now.
We can also opt for not opting for 4480 in the next year.
Yes, very much.
Okay.
सर एक क्वेश्चन ऐसा था. हेलो.
Yes, sir.
सर एक मेरा असेसी है कि उसका पार्टनरशिप फर्म है और वो पार्टनरशिप फर्म में उसका जो मेन बिजनेस हमने सिर्फ वो उसको इन्वेस्ट करने के लिए बनाया. हस्बैंड वाइफ का पार्टनरशिप फर्म है, उसको शेयर मार्केट में इन्वेस्ट करने के लिए सिर्फ वो फर्म बनाई हुई है. अभी उसके अंदर ऐसे ज्यादा ट्रेडिंग नहीं है, बट थोड़ा ट्रेडिंग है, कुछ इंट्राडे भी हुआ है जिसके अंदर उसको प्रॉफिट है 30,000 का. और उसके अलावा बाकी कुछ शॉर्ट टर्म गेन है. तो पार्टनरशिप फर्म एलिजिबल है क्या, मतलब ट्रेडिंग करने के लिए, या फिर जैसे क्या दिखाना चाहिए, इन्वेस्टिंग दिखाना?
So the basic purpose of forming any partnership firm, this is given in a partnership act, is to do a business, right? So if you are forming a partnership firm to do a business, and the moment you stop doing that business, even if you don't close your partnership firm, still it ceases to exist because it is formed with a basic intent of doing a business. Now, forming a partnership firm with an intent to do an investment is something deholds the intention of the Partnership Act. But nevertheless, now here we have formed a partnership firm, right? In this partnership firm, we are doing some trading and we are also having some investments for which we have a long-term perspective.
Yeah.
As I said in my deliberation, the CBDT permits maintaining two different portfolios. One portfolio is for trading and one portfolio is for investment. So as far as those assets, as far as those shares which you have classified as a fixed asset, as an asset, you treat it as an investment. या फिर आपने इसको असेट्स में बताया, इन्वेस्टमेंट में आप उसको कैपिटल गेन में लेके जाओ. तो जो आपने इंट्राडे ट्रेडिंग करी है उसको आप आपका बिजनेस इनकम दिखाओ.
ओके, तो आगे कंटिन्यू वैसे रख सकते हैं सर? बिल्कुल
रख सकते हैं. यू कैन ऑलवेज मेंटेन टू डिफरेंट पोर्टफोलियोज. मैंने जो सीबीडीटी का सर्कुलर एक शेयर किया था, सबसे पहला सर्कुलर 2007, उसमें बहुत क्लियरली लिखा यू कैन हैव टू डिफरेंट पोर्टफोलियोज.
सर बट जैसे आनंद राठी करके जो ब्रोकर है, सिर्फ उसी में हमारा एक ही पोर्टफोलियो है. सिर्फ शेयर्स का हमने इस तरह से दिखाया है कि जो स्पेकुलेशन जो इंट्राडे किए हुए हैं वो अलग से दिखाया है और जो शॉर्ट टर्म थे वो अलग से दिखाया है.
सर इट डिपेंड्स ऑन, मतलब द प्रूडेंट थिंग वुड हैव बीन टू मेंटेन टू डिफरेंट demat accounts or two different trading accounts. But even in your circumstances, considering the fact that you are maintaining only one trading account, still as far as your shares and investments are concerned, if those are reported as an investments in your balance sheet, then yes, you can very much claim it as a capital gain income.
Okay.
Yeah.
Yes, thank you.
Sir, shall I ask one question?
Yes, sir.
Sir, can you please throw light on how to do accounting of F&O transaction in case of proprietorship as well as private limited company?
So I'm little unhelpful in this scenario because I'm purely into tax litigation. I don't even file tax returns, sir. So extremely sorry for this.
Okay, sir.
I can help you with computation of turnovers. I can help you with all the legal aspects. But as far as accounting is concerned, I haven't done anything in the last 10 years. Extremely sorry.
Okay, sir.
Hello, sir.
Yes.
Yes, sir. This question regarding turnover, calculation of turnover. So
Yes.
you in your PPT you have shown example for option and future, right? But for intraday, how we can calculate the turnover? Means if a person has purchase and sell only equity in intraday, so for intraday, how we can calculate turnover?
Even in intraday, just consider the net profit or loss.
Okay.
That's it.
Only net profit or loss.
Yes.
Absolute
Because
figure of net profit or loss.
yes, because intraday is a speculative transaction.
Okay.
So at the end of the day, you only earn profit or
Yeah.
you make incur loss. You don't actually put in that commodity.
Yes. Yeah. Okay. Thank you, sir.
मॅडम माझे एक ना व्हर्च्युअल कॉन्फरन्स चालू आहे एक 15 मिनिटं थांबा ना, मी फोन करतो तुम्हाला.
Sir, hello, sir.
Yes, ma'am.
I want to continue the question ahead. Like in intraday, suppose we are trading in 3-4 script. So what you say ki we need to consider only the net profit or loss. So like F&O, it will be calculated profit plus loss.
Yes, ma'am.
Script wise, we need to calculate, right?
Exactly, script wise.
Okay, okay, yeah. Thank you.
Members, if anybody is having any question, you can put it in chat box or you can ask directly. And if the questions are over, then we will move forward. Is anybody having any question? Please put it in a chat box or you can ask directly. Sir, I guess there are no queries from members now. Sir, I think there are no more questions. So let's we move forward to our formal vote of thanks part. I thank Mahavir sir on behalf of Nasik branch and its member for guiding us on a hot topic of a time. I think we have got answer for all the questions regarding taxation of shares and calculation of turnover in case of future and options for audit. And like that, all questions I think we have got answered from the sir. We thank you, sir, for that. I also request, sir, please share your PPT so that we can circulate it among the members. And I thanks all the members for their participation and patient hearing. Thank you all. With this, I declare that this session is over. Thank you very much, sir, and thank you, everyone. Oh, sir. चाय भी पास तो